Welcome back to Dinar Community Channel. In the shadowy corridors of global finance, there has long been an overlooked currency sitting quietly on the sidelines, one that many dismissed, ridiculed, or wrote off entirely. But now, a remarkable shift is taking place. Central banks, traditionally slow-moving institutions steeped in risk-averse protocol, are beginning to pay close attention to a currency that was once seen as speculative fiction. The Iraqi dinar, long relegated to the realm of rumor and distant hope, is suddenly emerging as a legitimate subject of conversation, analysis, and, most notably, strategy among central banks across the globe. This change isn't just a fluke or a reaction to market noise. It's the result of a convergence of macroeconomic, geopolitical, and financial reform indicators that together point to something transformative, the rebirth of a currency once crippled by war, sanctions, and corruption. Today, central banks aren't simply observing from afar. They're preparing, hedging, and even quietly acquiring positions in anticipation of what might become one of the most significant currency realignments of the decade. What's causing this shift in perception? To understand, we must explore the multiple layers behind the growing attention, from economic policy changes in Iraq to signals coming from key global institutions, from internal restructuring within Iraq's banking system to the ripple effects felt in oil markets and trade corridors. For years, the dinar was dismissed by mainstream analysts. It was seen as a relic of a broken economy, a currency propped up by speculation rather than fundamentals. But under the surface, Iraq has been rebuilding, not only its infrastructure but its financial core. Quiet reforms, often overlooked by international media, have been gradually reshaping Iraq's central bank policies, enhancing transparency and aligning with global standards. These actions, once seen as procedural, are now understood as strategic. One of the most significant signals that caught the attention of global central banks came when Iraq began coordinating closely with the International Monetary Fund (IMF), the World Bank, and the Arab Monetary Fund to realign its monetary policy. This included stricter regulation of currency auctions, de-dollarization efforts, and digital transformation of banking services. Additionally, Iraq's ongoing move to adopt a gold-backed or asset-backed monetary standard, hinted at through official purchases and diversification of reserves, indicates a long-term intention to anchor the dinar in tangible value rather than simply floating in the speculative ether. Central banks are particularly sensitive to signals of stability, and the dinar is now projecting just that. Iraq's foreign currency reserves have ballooned to unprecedented levels, providing a powerful buffer against inflationary shocks and currency volatility. These reserves, paired with the country's enormous untapped oil wealth, present a compelling story. When a currency is supported not only by paper promises but by substantial hard assets and consistent inflows from natural resources, the calculus for central banks begins to shift. Beyond Iraq's borders, the geopolitical winds are also shifting in the dinar's favor. As nations around the world move toward de-dollarization, particularly in Asia, Africa, and parts of Europe, the hunt for stable, alternative currencies is intensifying. The BRICS Plus movement has spurred renewed focus on regional financial independence, and Iraq's strategic location in the Middle East places it at the center of new trade and energy corridors. This evolving landscape has encouraged regional banks to consider bilateral agreements in local currencies, particularly those backed by oil or other commodities, and the dinar is now being floated in serious discussions. Even the major financial players in the West have begun to take notice. Subtle shifts in policy from institutions such as the U.S. Federal Reserve, European Central Bank, and Bank for International Settlements suggest a growing awareness of Iraq's financial trajectory. While no official statements have confirmed active holdings in dinar, private assessments and leaked memos have hinted at exploratory evaluations being conducted. When central banks evaluate a currency's potential, they do so based on factors like liquidity, risk exposure, global alignment, and trade facilitation potential, all of which the dinar is increasingly meeting. Additionally, Iraq's political landscape, historically unstable, is experiencing a rare period of relative calm and cohesion. Prime Minister Mohammed Shia al-Sudani's administration has demonstrated a commitment to economic reform, anti-corruption efforts, and international cooperation. This has bolstered confidence not only among investors but also among foreign governments and financial institutions. For central banks, the political environment of a nation is just as important as its economic outlook. Stability breeds confidence, and confidence drives currency legitimacy. Furthermore, digital currency initiatives are adding new urgency. As the world inches closer to central bank digital currencies (CBDCs), the relevance of outdated systems and currencies is quickly fading. Iraq has taken decisive steps in recent months to modernize its banking sector, implement digital payment platforms, and establish blockchain-enabled transparency tools. The modernization of Iraq's monetary infrastructure is more than cosmetic, it's foundational. It's a clear signal to central banks that the dinar is being prepared for integration into the emerging digital financial ecosystem. One of the strongest indicators of the dinar's resurgence came through leaked interbank communications suggesting that multiple Gulf and Asian central banks had already initiated the groundwork for potential bilateral dinar trade agreements. These confidential arrangements, quietly progressing beneath the media radar, reveal a pragmatic strategy: secure access to Iraqi oil without being overly reliant on the US dollar. Such developments mark a radical shift in perception, with the dinar transitioning from a speculative side note to a practical regional tool. It is also crucial to consider the private banking sector's involvement in the currency transformation. Major institutions like JP Morgan Chase, Citibank, and HSBC have reportedly been positioning their currency desks for future IQD transactions. While not necessarily holding dinar on their balance sheets at scale, these banks are building the infrastructure to handle large volume exchanges, which would be essential if the currency were to re-enter the global marketplace in a meaningful way. For central banks, this readiness from the private sector serves as further validation. Adding more fuel to the fire is the rumor, unconfirmed but persistent, that a multi-phase revaluation plan is already in motion. Speculators have long whispered about contract rates, redemption windows, and Tier 4B operations. What's new is the growing alignment of institutional behavior with those rumors. Quiet policy tweaks, unusual currency buyback programs, and synchronized audit trails are leading some to believe that central banks are no longer treating these whispers as fiction, but as signals worth decoding. In economic terms, revaluing the dinar would have global ripple effects. For central banks holding US dollars in vast quantities, any credible alternative currency, especially one backed by oil, presents a strategic opportunity to hedge against dollar depreciation. In this context, the dinar becomes not just a regional interest but a global one. Iraq's potential role in future OPEC negotiations, energy-backed settlement mechanisms, and BRICS oil exchanges further increases the attractiveness of the dinar. This growing attention is not just about economic diversification, it's also about timing. The world is navigating the choppy waters of inflation, recession fears, energy transitions, and geopolitical fragmentation. In such an environment, the emergence of a freshly reset, asset-backed currency like the dinar presents an opportunity for recalibration. Central banks are not in the business of taking wild guesses, they respond to structure, signals, and systemic incentives. And right now, the dinar is triggering all three. It's also worth noting the psychological component. Once labeled as a scam currency by mainstream analysts, the dinar now offers a redemption narrative, one that appeals not only to central bankers seeking returns but to institutions yearning for new stability models in a fractured world. Iraq's journey, from chaos to coordination, mirrors the global desire to pivot from disorder to resilience. For central banks looking for the next frontier in currency recalibration, that narrative carries significant weight. Investors, particularly those in the dinar community, have long held the belief that the currency would one day be revalued and recognized for its true potential. While critics dismiss these voices as fringe or delusional, central banks are now beginning to echo some of the very same talking points: oil-backed stability, asset diversification, geopolitical alignment, and institutional readiness. It's not about hype anymore, it's about preparation. What lies ahead remains to be seen, but the writing on the wall is becoming clearer by the day. The dinar is no longer a forgotten currency marooned in the wreckage of the past. It is emerging as a currency with potential, perhaps even one that will play a pivotal role in the evolving global monetary system. Central banks, once skeptical, are now quietly acknowledging what the most patient investors have long understood: the Iraqi dinar may be on the verge of a financial renaissance. In the final analysis, central banks don't chase rumors, they follow patterns, data, and strategic shifts. And every metric, economic, political, digital, and institutional, suggests that the dinar is no longer just a footnote in the history of post-war Iraq. It is being written into the future of monetary policy, one confidential briefing and strategic acquisition at a time. Whether the full extent of this shift will be revealed in days, months, or years remains uncertain. But what is undeniable is this: central banks are no longer ignoring the Iraqi dinar. They are preparing for its return. Like and subscribe for more videos.